Hi, Sylvia. Good
He-
morning.
Hello. Hi, Anka.
Just a quick sound check.
All right.
Hi, how are you?
All good, all good. How have you been?
I've been good. I've been good. So, congratulations on the new change.
Thank you so much. Yeah, trying to
Very
push business
exciting.
from the region and expand from Kenya to East Africa. Yeah,
It's actually really awesome.
yeah. So we'll do like a recording and then we'll just plug in the sponsor broker afterwards. But it's truly an honor to have you
All
once
right.
again. And today we'll just do
I
like
love you, Sylvia.
yeah, you'll just take us through your most recent trades, how you normally do your intraday and your I think today we can focus mostly on the intraday trades.
Okay, cool. Sounds, yeah.
Yeah. Your in and out, what you consider, and then we will do like another session, a different session for your swing trading style. Yeah.
All right. That sounds good. You
All
guide
right.
the way.
Yes, yes. All right. So I think we can start and guys can join as we go. Um, so today's session is sponsored by markets.com. Markets.com is a brand, works closely with Finalto Group from the UK FCA regulated, also have an office in South Africa, and we're looking to expand our networks within the East African region. And today we're honored to have Anka Metcalf on our trading lounge, and she shall be detailing to us about her day trading intraday approach to her trading with her most recent trades. So let me give you access to share screen, and then we
Okay.
can get started. Yeah.
All right. All right. All right. So I can start sharing this screen.
Yeah. We'll do like 30 to 35 minutes thereabouts.
Perfect. All
Yeah.
right. So can you see the screen right now?
Yeah.
Oops. I have like, oh my goodness, I have a different name here on my Zoom.
Oh, Trevor. Okay, no worries.
Okay.
Yeah.
Okay. So my husband was probably in a Zoom meeting. So,
Okay, no worries.
all right.
Right.
All right. So let me know when.
Yeah, I think we can start with your most recent trades. Now we can look at like commodity pairs as well. We can also do like energies and FX.
Okay. I don't do FX, but I gladly to look at some
Okay.
pairs. All right.
Okay, no worries.
All right. So, good morning, everybody. Good morning, Sylvia. Thank you so much for having me here today and start the day with you. It's always a pleasure to talk to you and to your audience. My name is Anka Metcalf, and my approach to trading in general has three aspects. I day trade, and I day trade futures. Basically, I trade four charts. I do look at other instruments as well, commodities, but this is typically more of a swing trading approach than a day trading approach because of the volatility that we have had within the last couple of years. And I'm sure everybody has noticed that the volatility literally went through the roof. So they became really subject to a lot of volatility. So what does volatility mean for me as a day trader? They mean really wide stops. Sometimes position sizing becomes quite impossible to take a trade with. And At the same time, you are subject to stopping out of the trades more often, which is not pleasant, and I don't like it. So I reoriented myself within 4 charts. So I typically trade NASDAQ E-Mini, S&P E-Mini, Dow E-Mini, and Russell E-Mini. These are my go-to. These are my, I call them my employees, my go-to. I create an income trading these every single day. I focus on these, and especially in the power hour. So the power is just about to start in an hour and a half. So just really excited for a brand new day. So Sylvia was asking me earlier about one of the most recent trades that I've closed, and I do have gold here in front of me, and it is one of the trades that we have closed and has had a phenomenal impact on our portfolio for this month in particular, where it has been quite a struggle to pull money out of the indices because of everything that is happening geopolitically and everything that is going on with the markets with increased volatility. And plus that we have entered into the fourth quarter, which is the most volatile, the most active, the most volume that we have. So I'm going to walk you through the trade and my criteria for getting in. And here we have GLD because for some reason, the gold futures is not popping up on this platform for some strange reason. But we have noticed an area of support, and this is where I started watching gold. This is the GLD, which mimics the gold futures really, really well. So if you're not trading gold futures, GLD, this ETF is the way to go for gold. So first of all, we notice here that we have a really substantial band of support, and this is the support area here. This is from February of this year. By the way, this is a daily chart. And because it is a swing trade, it was based on the daily chart. So we have a prior low that has formed this year, earlier in spring. And in fact, with a double bottom from which we got the lift here back in March. Now, throughout the summer, the price action has been pretty choppy and has been pulling back. And as you can see, it came in after the break of this support. And we had some clues that the price action was going to slump a little bit because we had been creating this downtrend. We have the high, we had the lower high, we had 2 lower highs right here as well. And then on the break of the support that we have literally had into this region right here, from these pivot lows, first of all, from the pivot from June, and the second of all, from the pivot of August, this time around, it was obvious that the price action wants to go lower. I didn't participate to the short side. I had something else to trade. However, I became super interesting as the price action was revisiting this prior low, because even if we had back in, for example, August, we had a little bit of a pop here. This still, and I still traded this because it was with the trend, and the dominant trend, if we look even on the daily, even on the weekly or the monthly, it's still very much bullish. So I was waiting for any kind of buy signal that would offer me a rally in this respect. Now here we had the support. Here we had the support that retested the prior support, and then we had the mini rally. And then I was waiting for another mini rally over here, and I'm pretty sure that I traded this one as well. But then it got rejected from the downtrend, it got pressure from that trend line, from that resistance, from that declining resistance. So basically what I did was I basically let it go. So got out, let it go, and I was waiting for another buy opportunity. So the buy opportunity came as a confirmation, and I'm going to zoom in a little bit here to see where my logic was with this trade. So first of all, we had the 1, 2, 3, 4, 5, 6 candles to the downside, right? So we know from Fibonacci that, 5 is a fib number. So anything that is around the 3, the 5, or the 8 is definitely going to have a high impact on price. So therefore, I was very cautious around this area because, first of all, we were getting very extended from the prior support, now becoming resistance area for price. So actually, the price action would have the momentum to run into this zone right here. And actually, that was my target, to be very honest. And I've noticed that we have a bunch of dojis here. In fact, we have 1, 2, 3 dojis. So I was looking at these dojis here, and the first attempt for a candle to break above any kind of doji of the prior day would have been my entry signal. And this is the date where we entered, October the 6th. We just closed the trade a few days last week. Actually, we closed the trade last week. And we reinitiated a new trade that I'm going to talk to you about. So this is the last trade that we closed. You know what? I'm sorry. We closed it this week. I think it was on Monday. We closed it on Monday. As soon as the price action got a little bit of red here, this is where we closed the trade. So basically, we had not only the target 1 achieved into the prior resistance, we had target 2, which was in the 200 SMA. That also coincided with these prior highs. And we actually went higher, and at the first sign of rotation, so at the bottom of this doji right here, so I'm going to put a level here so you can see where we exited. So this is where we exited on the confirmation of the sell pattern from the doji down, and it was into resistance. So it made a lot of sense from this prior pivot high from June. So it made a lot of sense to exit the trade at that point. So this was trade number 1 that was originated on at the beginning of the month on October 6th. Now we initiated another trade, and that is yesterday, as soon as yesterday. And again, this is the swing trade as well. So we took it above this doji high. So we were playing around these dojis. I love to play around with dojis because they signal indecision. And the indecision, the price indecision, the indecision that is coming from the bulls and the bears pretty much meeting into the same zone, right? The open and the close overlap. Then we bank on this possibility of their indecision, and it's a decision for us. And as soon as we get some bulls running above the prior high, so above the doji high, we're seeing it as another entry signal. So this is our entry signal. Again, that trade was initiated yesterday, and our stop is right into this just a little bit below the 10 exponential moving average. This is this pink line right here, and obviously just below the doji low. So in this particular case, we're expecting a continuation higher into the target level around this resistance where we have these double top formations. And of course, so we have it into, let's say, with the 190s and into the prior high here into the 194. These are the 2 most recent trades that we have done. And also this week, we have traded a lot, the Dow and as well as NASDAQ futures. So I'm just going to put here the Dow. All right, so the Dow as well, you can see that I have a lot of notations on here. These are really worth charts. And in the Dow, within the last 4 days, we had a lot of chop, meaning that we didn't have the release of price to the upside or the price to the downside. I don't have any swings engaged into any of the commodities, as anything can flip immediately. First of all, we have the geopolitical context that is very sensitive to price action. And second of all, we have a bunch of earnings that are coming out this week and next week are the 2 most super active weeks of the whole entire quarter. So you don't want to miss any kind of action. We had yesterday a really bearish price action. We had this is today's price action. So basically we were expecting we're expecting a lot of chop, and we want to plan accordingly. But when I day trade, so I'm going to take you to a day trading journey right now. So when I day trade, I like to look, first of all, I do my top down analysis, right? So I like to look, for example, at anything that is happening throughout the chart. So notice that here we have 3 days of total indecision. These are inside days, so meaning the price action is not exploding to the upside and is not imploding to the downside. So we're still holding support. And the main reason for this is basically earnings, and everything is going to be set aside and earnings are going to come front and foremost. So basically the last 3 days have been indecision days, right? So we are not getting a pop above, we're not getting a pop below. Not more so within the Dow, you're also noticing that we have a prior pivot low here. So basically the price has room to continue. Now today, the overnight price action was quite bearish, and it was challenging the prior lows from the whole month of October. And basically, if you look at October, this is October in a nutshell. It's just a pop up and a breakdown. You notice the downtrend that we had. Basically the dominance is to the downside because we have a lot of pressure to the downside. We have a high, we have lower highs right here, and this could signal a break to the downside. And this is the area that I focused on. So once I have this area all cleared out and I have the indication that throughout the overnight trading session, the price action has been bearish and it has been testing these lows, this is still not confirmation enough that the price action is really going to continue lower. So obviously I don't trade before the New York trading session opens because I have strategies that are designed for the New York trading session open. You can trade them obviously in the London session as well. You can trade them throughout the day, but this is where the institutional power playing is at and where the money is being pumped into the market. So from the daily chart, I quickly go to the 1 hour and I try to signal and see if there are some opportunities for the upside and for the downside. I also check the volume here, and you can see here the pop up in the volume, and that is because this volume is coming in exactly at 9:30, so exactly when the New York trading session starts. So I love to trade with volume. When I trade stocks, when I swing trade stocks, obviously I love stocks that have tons of volume. I don't trade any kind of stock that is thin, that is illiquid, because I like the possibility of getting in and out without having any kind of let's say possibility of having let's say you know, a big spread where you can have a really bad fill, or you can have some really unexpected gaps or moves. So at this point in time, you could see that the price action here has been quite shallow and has been really indecisive. We have, again, a bunch of dojis and we have a bunch of candles that are still in a range. We had a little bit of a drop down here at 7 o'clock, but this tested the low. This actually, and one of the things that I like to watch for is to see if institutions are doing some forced sells or some forced buys. These are either spikes to see if there are any traders into that area, or if there are any drops to see if there are any sellers into that area. And by doing that, what these institutions are doing, and by institutions I mean algorithms, what they're doing is they're searching to see if there are any power players in those zones. And if they're not, what they do is they grab more contracts or shares, depending on what you're trading, to take the price action either higher or lower. So they basically clear all the stops and they grab more contracts to push the price higher or to take the price lower. So this is on the 1H. The 1H is literally undecisive. We know that the 10 EMA is forcing the price down. So the 10 EMA at this point is just, you know, pushing the price lower and is just not cooperating with the bull side. So the bears have dominance. And from this point on, I try to go to the 5-minute where I find my comfort zone for my day trades. And all right, just want to make sure that you can hear me. Okay, Because for some reason I cannot hear you and I don't
Yeah,
know what's
we can
going
hear you.
on. All right. So I will continue. At this point, for some reason, I don't have my video camera is not working. My camera is not working and my speaker is not working at this point. So I don't know what's going on. All right. So I'll wrap up my train of thought and I'm trying to log in on my laptop to see if things are different there. All right. So with that being said, you know, I like to live on the 5 minute. The 5 minute is sort of like that mid zone where you have the nice where you have like that really nice time frame that is not too small to get hit and banged around by algorithms like the 1 minute, and it's not as wide that will literally create these really wide stops, like let's say the 30-minute or the 1 hour. So it's just that sweet spot that keeps you in the trade a little bit longer, captures bursts of momentums, and it's a little bit of a stress-free zone. It's not as quick as to make rash decisions as the 1 minute or the 2 minute. And like I said, it's not too wide that you would have to wait for hours until a setup is formed. So basically what we have going on here, I start looking and I'm just going to use some levels here just to show you my train of thought and to have like a visual representation. So basically, I like the fact that this area right here is an inflection point. What that means is that this support that is from the left-hand side, this support right here, and this support into the secondary also happening overnight, created this really nice shelf. The price action actually went lower through this shelf. And then when it came back, you could see here that it created again the dojis, and this is the theme again. So we have a bunch of dojis here, like 4 or 5 dojis. And you can see here that and probably this is news. I haven't checked the news yet. So super early here still. And you can see here that the price action is taking the highs out. So this is what I like to call as a trade. So for example, I take it over the highs. I always put my stop below the pivots and I let it run. And of course, then I establish the targets, and this would be like an overall target confluence into the 33, let's say 33,080. And this would be something that, you know, I watch. Now, this is obviously news, and I know that we have a bunch of news today that is coming in at 8:30. I don't know if but I think we have the ECB today. So like I said, I have not checked the news, and this is something that you need to do, and I am always doing just before I place a trade. Is the number one thing. Look at charts. I don't look at anything else. Simply what I do is I look for news and how the news can impact potentially my trade. Now, I think it's very important to note the fact that I don't trade any releases. So when the news comes out, I'm sitting on my hands. I'm not doing anything. I am just an observer. And what I do is I trade the reaction to the news and not the news itself. And I find that this helps me stay a little bit more focused. You eliminate the tendency to, let's say, chase trades at that moment. So it makes a lot of sense to, for me, which, by the way, I'm a more conservative trader, to basically, you know, stay in the trade. All right, so. All right, so what I'm doing right now, because I don't have any sound and no video camera. Okay.
Okay.
What I'm gonna do is gonna try to log in quickly on my laptop here so I can regain connection with you guys. And
All right.
sorry about that. I don't know what, something failed on my side.
No worries. As we wait for you to connect, maybe you can tell us, now it's the earnings season, this particular month and also going into this quarter. What do you normally...
Let's see if I can log in.
All right. Yeah. What are your major, like, peaks
Oops, I can't.
during the earnings season.
Okay,
Like,
so it seems that there's something really weird because I can't log in on my laptop either. So let me see.
Battery 90%. Connected to OCDANBLU.
All right, just a quick sound check. I'm sorry about that.
no worries.
Okay, no, I can't hear a thing.
To all our
Yes,
attendees, you can be typing down your questions on the chat section, and we'll be sure to ask to Anka as we close the webinar.
All right, so I'm back. I'm not sure if I can hear you.
Yeah, you're back. Can you hear us?
Apparently not. But if you can type in your questions, more than happy to.
Yes.
More than happy to
All right. Can you hear us?
answer.
Can you hear us?
Okay, so for some reason, my camera is not being detected again.
What are your major picks? All right, so I've typed a question on the chat section.
All right, awesome. All right, so I'm glad that, okay. Okay, so I'm glad that at least we can discuss via chat. Okay, so during earnings season, what are your major stock picks? I think this is a great question, and this comes with the territory. So what that means is that, first of all, let me give you a little bit of an insight of, our earnings season and how I look at earnings season. So earnings season is divided into two categories. The first category is the most active season. First 6 weeks are the weeks where you push the pedal to the metal and you have the possibility to make a ton of money. And then there's the latter part of the season, the last 6 weeks. And within the last 6 weeks, it is the most choppier, most companies that are reporting do not create high impact into the market. So therefore continuation is not it's not that great. So follow through is something that comes into the first 6 weeks when you have the major players that are reporting earnings. So I look at my earnings calendar. So you could grab the earnings calendar. Pretty sure, most of the platforms and the brokers have that available for you. Or you could get them on the internet. There are a bunch of websites that are offering an earnings calendar. So within this earnings calendar, you have two sets of reports that are coming pre-market and reports that are coming after the market closes. Read and I pick stocks after the report because I'm a swing trader. I don't get in before the report happens. So I wait until the stock reports and then I look at the price action to see if it would be conducive to go long or short. And if I have some kind of a pattern that is conducive for a nice continuation. But as in regards to the stock picks, so for example, today, it is Thursday, and before the open, let's say we have stocks like UPS, right? UPS. Okay, so this is the stock. Let's take it to the daily. So this is the stock that will be reporting today. Or maybe it already did. Looking at the time is 8:30, start reporting starting with around 6:30 or so. So you go typically to a minor time frame to find that out. And yeah, probably they have already reported. So again, you have to check the reports that are coming in. you know exactly when they report, and then you have to check. You don't necessarily have to check somewhere to see if they have reported, but it is advisable to check and see how they reported. Whether they missed or beat their estimates. So for example, this is what I do. I let it, for example, trade for that specific day. I could do my analysis beforehand and say, hey, you know what, the stock is trading right here. Does it have any kind of, so you can see that the next support that it has, would it be into this prior high or into these highs right here? So I would actually create a game plan for today's Thursday. I would create a game plan. The soonest would be for tomorrow, or it would be for next week. And that's because I'm a swing trader. If I would be a day trader, I would be all over price action, because I know the stock has the possibility to run down 146 to 136. So that's about $10. And I would go immediately, let's say, to a smaller time frame, such as, I don't know, let's say the 15-minute. And I would take a look and see where it would be trading. This is without the pre-market data. This is with the pre-market data. So you can see that probably they have reported. Like I said, I haven't checked. Still early here. So at 6 o'clock, we saw just quite a big move to the downside. And what I would look for as a day trader, the same type of strategy and criteria that I look definitely for the at the futures chart. So either the 5 or the 15-minute, and I look for either buys, buy pockets, sell pockets. I look for breakouts, breakdowns, or any strategy that is within the momentum and it is with the trend. However, something very interesting, for example, today, after the close, Amazon will be reporting earnings, and this is going to be one of those stocks that definitely high impact the activity of NASDAQ, the activity of the Qs, and definitely NASDAQ futures. So this is going to be a really high impact of high importance for all the traders to watch, whether you're a day trader or a swing trader. So for example, because it's pending, I'm not going to be trading it, not unless I'm a day trader. So if I'm a day trader, again, I go to the 15-minute or the 5-minute and I try to find some trading opportunities there. But as a swing trader, and because I only trade, I'll swing trade I'll swing trade stocks and ETFs, futures, etc. I tend to look only purely at the daily charts or the weekly charts, and I try to find inflection points to where the price can go at this moment. So you can see that this week, I mean, Monday through today, the price action broke below the support. So definitely room to move lower. And we're going to see open how today will pan out. But typically what happens is that it is a bit of a chop and a bit of an unexpected protection behavior right ahead of earnings. Some stocks have the tendency to run into earnings and actually establish highs and breakouts and higher continuations. And some stocks, there are some whisper numbers that are out there, and the price action is reacting based on those, and especially based on technicals, because now more than 95% is technical and very little into fundamental. So technical trumps everything right now. So this is something that I watch very, very closely. And of course, for example, stocks like Bank of America that have already reported a couple of weeks ago, they're safe to trade right now. So I don't get in trades that are so for example, even if I see like the best trading opportunities on, I would not take it. Intel is, again, one of the stocks that will be reporting today after the close. This is also a market stock. It's a stock that belongs into NASDAQ, right? So when it will come with its estimates today after the close, then we will see in which direction the price is going to go. And from that point on, we will decide whether on Friday, or I would say most probably next week, because this has been like a very turbulent week so far. So this is how I look at the markets. All right.
All right.
All right. So I am ready for questions from the audience. it sucks because I can't hear anything.
Yeah. But thank you so much, Anka, for that in-depth analysis. I think we've gathered quite a lot from the indices and the E-minis and the contracts that you normally trade. We do insist that people try and trade using markets.com trading platform. It's not so different because you'll still find the asset classes that Anka is using to trade on our trading platform. So I've given you guys a link to that. You can test it out. Also at this point, I wish to thank individual attendees by name and mention you guys for showing up today. Stacy, Kish, Faith, and I think this is George on Techno. So with that, guys, I think that's a wrap. Anka, I'm just gonna thank you so much for being on our trading lounge. We're gonna share this recording with you, and then we're gonna have it uploaded on our YouTube channel as well. And we do insist that people have you back. We'd love to have you
so
again.
Sylvia, I could hear you. I don't know how long that's gonna be for, but I can hear you. I do apologize. I don't know. There's something wrong with my system this morning. Thank goodness we have the mic working.
Yeah, so I was just saying to the attendees that they can actually use these lessons that you showed us, trading the indices and the E-minis and the futures and everything on the trading platform from markets.com. They can test it out, and then thanking them for showing up as well, and also for your time, Anka, for being available to train us, refresh our memories on your intraday trading and everything good. And so we'd love to host you again in the future. Thank you for being available during this, especially during this earnings season. It's a busy time for you, and for making the time. So with that, guys, I think it's a wrap for today. I haven't seen any other questions streaming in, but I'm gonna give guys 1 more minute. If you have a question to Anka, you can just type it on the chat section. We can have it addressed before we wrap up. And yeah.
I just want to thank your audience, and I want to thank you, Sylvia, for the invitation. It's always a pleasure to talk to you and to talk to everybody there. And I'm looking forward to our next meeting, and I hope that's going to be soon.
Yeah, we hope so too. And if we don't meet again before the year ends, enjoy the festive period with family. Merry Christmas and good tidings to you as well.
Absolutely. You too, guys. Thank you so much for having me today.
All right. Thank you so much. Cheers, guys. Thank you. Bye.
Bye.